Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing gold mining stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Gold mining is a junior miner for gold, silver, and copper. It has identified 32 million ounces of gold equivalent, and its projects are located in Brazil, Colombia, United States, Canada, and Peru. It also owns 75% of a uranium project located in Alberta, Canada. This stock is getting pretty popular. Lots of funds and respected investors own this company, including BlackRock, Rick Rule, and Doug Casey. If you want to get exclusive news about the company, just go to the website GLDGnews.com. Sometimes the easiest way to invest is to follow the lead of other successful people. I know I've done that, especially with Warren Buffett. Another successful person is Amir Adnani. He is the founder of this company. He's also the founder of Uranium Energy Corp, Uranium Royalty Corp, and Gold Royalty Corp. I did a video last February on Uranium Energy Corp, ticker UEC. I'm going to give you a little background on the types of mining companies. There are two types, the junior and the senior. This company is a junior miner. A junior miner is an exploration company. It raises money from investors or other mining companies to conduct feasibility studies and try to identify how much gold is at a particular location. Once they complete the exploration process, and if they deduce the cost to extract the metal is less than the amount they can sell it for, then they usually sell the rights of the location to a senior miner. A senior miner is usually a larger company that has been around a while and is currently extracting and selling different metals. It is not uncommon for a senior miner to have a market cap north of $10 billion, although a junior miner tends to have a market cap of a few hundred million. When you invest in a commodity-linked company like a miner, the company is at the mercy of the market price of the commodity. You can do all the analysis in the world, but if you are invested in a gold mining company and the price of gold drops 70%, the stock will tank. The company is headquartered in Vancouver, British Columbia, Canada, and was founded in 2009. The ticker trades on the New York Stock Exchange, TSX, and Frankfurt Stock Exchange. Since the company trades on the New York Stock Exchange, you should be able to buy the stock on any online trading platform. You may notice lots of junior miners trade OTC, and I know there are several brokers that do not allow OTC trading. This is a micro-cap company, 243 million market cap. They're trading at $162 a share, and they have 150 million shares outstanding. These numbers are for the ticker that trades in the US, ticker GLDG. The ticker that trades on the Toronto Stock Exchange is GOLD, gold. This company is pre-revenue, but let's look at their financial statements to learn more about them. This is their latest income statement from their most recent reporting. This shows us the 9 months ending 8/31/20 and 8/31/21, and this shows us the 3 months ending 8/31/20, 8/31/21. So since there's no revenue, it starts with expenses. They have consulting fees, $47,000 depreciation, salaries, $220,000, exploration is the biggest, $761,000, because that's what a junior miner does. It explores and tries to find whatever commodity it's looking for, gold, silver, copper. Then you have $650,000 in general and administrative expenses, $250,000 in professional fees. They pay stock-based compensation to their employees. And the reason they have a big gain in the 9 months ending 8/31/21 is because of their 15% ownership in Gold Royalty Corp. They pass through this huge gain of $118 million on their income statement. This is a non-cash item, so it doesn't affect cash flow, but it makes their net income look really high, even though they had no revenue. They also pass through a loss of $7.9 million on GRC. Most of that loss was in the 3 months ending 8/31/21, $6.7 million. Gold Royalty Corp, ticker GROY. This is another company the CEO started. And this company is not pre-revenue anymore. They reported $192,000 revenue in the third quarter of 2021. The way a gold royalty company makes money is they fund the projects for a junior miner. In return for funding those projects, they receive a royalty on whatever that project produces. And this company, GRC, has a market cap of $600 million. Since GLDG owns 15% of that company, that 15% ownership is an asset of this business. That's another big benefit you get when you invest in this company. You get that 15% ownership. If the stock price for Gold Royalty shoots up, so will this stock price. They passed through a litigation gain of $667,000. A subsidiary of this company, BRI, it looks like they were supposed to receive royalty payments, but they didn't, so they went through legal action. And this claim is tied to a project that occurred back in 2018. So they had a net loss of $7 million in this quarter, but they have that big gain of $94 million in the 9 months ending 8/31/21. Only because they passed through that large non-cash gain of $118 million. Let's look at the assets section of their balance sheet. Their cash balance went down from $9.2 million to $1 million. They have $87,000 restricted cash. Restricted cash is cash that's set aside for a specific purpose. That $87,000 is held by the bank. That's a security deposit for one of its credit facilities. It has $43,000 of receivables. This is how much money other companies owe GoldMining. $874,000 of prepaid expenses. So all this means is GoldMining prepaid for something they're going to receive in the future. And $80,000 of short-term investments. Those are their current assets, $2 million of current assets. $500,000 of reclamation deposits. This is related to the restoration of campsites at its Yellowknife project. They have $1.8 million of PP&A. $55 million of exploration assets. Here's a breakdown of the $55 million by project. The bottom one, REA, that's the uranium project. Their largest is worth over $13 million. And here's the 15% ownership in Gold Royalty Corp. So if you own this stock, these assets are due to you. These are your assets. Also, if you own the stock, the liabilities are due to you as well. And all their numbers on their financials are Canadian dollars, because these screenshots are directly from the company's financial reporting. They have $1.2 million of accounts payable. This is how much money they owe other companies. $30,000 due to other parties. $69,000 of lease liabilities. $87,000 due to a credit facility. So they have $1.4 million of current liabilities. Their current assets were $2 million, so their current ratio is above 1. In their non-current assets, $81,000 of lease liabilities. And they took a government loan for $40,000, $882,000 of rehab provisions. These are funds that are set aside in case it needs to clean up a location. And this is fairly common in the mining industry. And they have $7.7 million of deferred tax liability. So this will increase their tax bill in the future. Let's look at the equity section. They raised $130 million from selling their business. They also have $9.5 million of reserves. This is the money they receive from options, warrants, and stock-based compensation. The reason they have positive retained earnings is because they passed through that large gain on their 2021 income statement. So their equity jumped up a lot from $64 million to $161 million. This is the company's operating cash flow section from their latest quarterly report. And this shows us the 9 months ending 8/31/20, 8/31/21, and the 3 months ending 8/31/20, 8/31/21. And the way you calculate operating cash flow, you start with your net income or net loss. Then you have to add back the non-cash items on the income statement and adjust for changes in working capital. So in the 3 months ending 8/31/21, they had a net loss of $7 million, but they only lost $2 million of cash flow. And the main reason was this $6.7 million loss they passed through. That was a non-cash item, so we have to add it back here. And the 9 months ending 8/31/21, they reported a net income of $94 million, but lost $6.4 million of cash flow. That $118 million gain is a non-cash item, so we minus that out here. But the company is pre-revenue, so you cannot expect them to have positive operating cash flow at this point anyways. This is the investing and financing sections on their statement of cash flows. They spent $48,000 in exploration assets. In the same time period last year, they spent $26,000. They received a refund from their restricted cash deposit. So in their investing section, they had a cash inflow of $39,000. Last year was $22,000. In the 9 months ending 8/31/21, they had a cash outflow of $2.5 million. The main reason was the deconsolidation of GRC, that was negative $2.5 million. In their financing section, they raised $211,000. This is from issuing shares and warrants. Last year was $1.7 million. They had a cash inflow of $95,000 in their financing section. Last year was $1.7 million. The company H.C. Wainwright, they price the stock that trades on the New York Stock Exchange. Their price target is $6. So they're saying the stock is really undervalued. And Haywood priced the stock that trades on the TSX. Their target is $4.25. So they're also saying the stock is really undervalued. This is where the stock has been trading the last few years. If you owned this stock from December 2013 to March 2014, you would have had a 164% return, while gold returned 11.5%. And look at the returns for these 3 other time periods. They crushed the return for gold. So when you invest in a commodity-linked company, it is a lot about timing, because if you time it wrong, you might have to wait many years to finally get a return. But if you time it right, you can make a ton of money. This bottom chart here is the price of gold from 2018 to 2022. So this is 2018 to 2022. You can see the stock price moves pretty much with gold. Not exactly, but very similar. It's pretty easy to value a company that mines gold. It moves with the price of gold. If they mine different commodities, then it will be a blend of those commodities. They have a beta of 0.83, so the stock moves less than the market. It's gone down 13% in the past 52 weeks, while the S&P is up 16%. The 52-week low is 99 cents, the high is 194. And the stock is trading above its 50-day and 200-day moving average. 800,000 shares are traded each day on this stock. Of the 150 million shares outstanding, 141 million are on float, 10% are held by institutions, and 2.5% of the shares are shorted. And it looks like their employee count has gone up a little. They currently employ 25 people. In the past year, there's only been insider selling. These are the individuals, the shares, and the price they sold at. 84% of the shares are held by the general public, 10% by institutions, and 5% by insiders. The biggest shareholder is Van Eck at 5.5%, then the CEO at 3.5%, Ruffer, the CEO's company, and the CFO, Patrick O'Bara, owns 0.62%. There are 44 tickers in the gold industry, and all these are senior miners. I put GoldMining down here. They have the 30th highest market cap out of the 44 companies at $243 million. But they're pre-revenue, so they won't have good ratios, so it's pretty much irrelevant to compare their ratios. But I just wanted to give you a visual in case you were curious who the largest companies in this industry are. Newmont is the largest at $51 billion, then Barrick Gold, all pretty well-known names. So to summarize, this company seems to have a really exciting future, because they already identified 32 million ounces of gold equivalent. If you do the math, that's worth a lot of money. And the second thing I'm really excited about is the CEO. He has an amazing track record in the commodities market. This is the 4th company he founded, and to have somebody with so much knowledge and so many contacts is a huge benefit when investing in a company. And most commodities, especially gold, they're really stable investments. They're always going to be needed. There's always going to be demand. This company seems to be doing everything right for a junior miner. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.